Hi, everyone. Welcome to Analyze Your Trade, episode number 28 for March 27th, 2018. Tonight, we will be discussing your trade ideas. And over the last few days, we had about 50 people submit up to 5 symbols each. And I've put the list together. You should see that on your screen right now while I'm talking. We're going to get through as many of those as we can today. My name is David Kosmeter. I'm the creator of TimingResearch.com, and I developed this show with Dean Jenkins of Follow Me Trades, and he's here to moderate tonight, so I'm going to go ahead and turn it over to him.
All right. Hey, thanks, David. It is good to be back, and can't believe we're doing show number 28. And time just flies, doesn't it? We got a good panel here, Christian and Mike, and I'll have you introduce yourselves in just a moment. But man, interesting times, volatile times in the market. You know, we went through all of last year with historically low volatility, and all of a sudden we got some lightning, we got some sparks happening here. So it's kind of interesting. And I think we'll be able to offer some good input on these symbols, and I've looked through them real quick, and there's a few good trades there. So I'm prepared to offer my thoughts on it, and I'm eager to hear what Christian and Mike have to say. I always learn something when I'm here. So let's go ahead and start off with the panel introducing themselves. We'll start with you, Christian, in just a minute or two about who you are, what you do.
Yeah, sure. And thanks, Dean, and good to be a part of the panel again. And I think we've been on this a couple of these panels now a couple times. So good to be back on. And thanks, David, again for having me on. So yes, my background is I am the CEO and founder of the Tribeca Trade Group. This is a company that I started 2 years ago. I run an online trading room. We look at option flow throughout the day, kind of just decipher the buying and the selling going on, and usually come up with a few different ideas during the day, swing trading ideas. Also, we do quite a bit. We really adapt to what the market is giving us, and right now a lot of day trading opportunities. Previously, my background, I was a institutional trader at Bank of America Merrill Lynch for a number of years. Traded a whole bunch of different products on the institutional desk, one of which was block trading for hedge funds and ETFs. And ETFs really give me ETFs are really my bread and butter because it really allows me to analyze a lot of markets globally. So while I was at Merrill, made markets in U.S. names, international names, commodity names, fixed income, so on and so forth, which gives me a lot of depth and understanding of global markets. Thanks again for having me on. Appreciate it.
Yeah, very good to have you here. So I'm glad you could join. And Mike, if you take a minute to introduce yourself and your approach to the market, what you got going on?
Hey, Dean, nice to be back. David, thanks for having me. Christian, good to be back with you here as well. So for me, I run a small company called SmartOptionTrading.com. What I do is I focus on the option flow to tell me where to go and what sectors they're rotating into, or really just what the sentiment of the market is. So every morning I do a video with setups on how I feel about the market that day, all option flow and news and my trades throughout the day, what I'm getting in and out of. And, like today, it told me right off the bat, there was a Netflix 305 put sweeper in the first 2 minutes of the market opening. It told me just to jump on that, which I did. And then just before Apple broke below that 173 area, somebody hit it for $100,000 of weekly 172.50 puts. So stuff like that will often tell me where the market's going. When you see a big put sweeper coming on a name like Apple on weeklies, you know something's about to happen. So I do that, and then every night I do a recap video, and I do mentoring. I do a webinar every week for my subscribers where I teach them how I trade or answer questions they have on options and go over stuff. And you'll also find me at Alpha Shark, where I over there and I mod for about an hour and a half a day in the chat room and show everything live that I'm doing. Really nice to be back here. I've been trading now since 2008 and do this full time for a living, so lots of fun.
Yeah, it is fun. Trading, this is the best job I ever had. I like it.
I love it.
Yeah, and good to be back with you again, Mike. And we got 2 option flow guys. So that should give us some depth as we look at these different trade ideas. So I'm Dean Jenkins, founder of FollowMeTrades.com. I've been trading for about 20 years. I've been a technical trader for about 7 or 8 years. And now I love technical trading, and I'll never go back over to the other side, right? Because price is the only reality at the end of the day. So I run a FollowMeTrades.com. It's a trade advisory service. I call out stock and option trade ideas that I'm trading in my own account with my own money, and give updates through the life of the trade. And I run a live trading room for an hour and a half, Monday through Thursday, to analyze the overall market and look for the next great trades. And I offer some training and mentoring services as well. Well, let's get into it. Let's take a look at some of these charts. We got some good ones coming up here. And first up, we're just going to try and speed date our way through these. Go around the panel, get an opinion, and it could be thumbs up. There's a trade right now. It could be, hey, you missed it, or nothing cooking, wouldn't touch it. But we may have differing opinions, and that's good too. So we're going to start off with Microsoft. We'll just keep the order there, go alphabetically. Christian, Mike, and then me. It's almost alphabetical. All right. So Christian, if you want to lead us off with your outlook, your view on the Microsoft.
Yeah, sure. And I think the screen share should be working. All right. So let me just give a quick 30 seconds. I usually use moving averages as well as value areas. They kind of give me a good sense of support and resistance. And so I've gotten on here a bunch of short-term moving average and long-term moving averages. So right now, so this is the March value area. We're going to be in April very soon. I've been in Microsoft for a good couple of months, and I actually got out this morning, which was a little bit of, I think, lucky timing. But this was where my target was, basically at the top of value, and I decided to get out of this morning. I still think it's a long, but I just didn't like the as you guys were talking about too, just kind of the overall volatility of the market, and was a little bit unsure for what we would see, not only for today, but the next coming days. So I still think it's a long. It's above the 100-day moving average. And, the volatility clearly has really picked up here with some of these bars. This is, which we're going to see in a lot of different places, a bearish engulfing bar. But for the long term, short term, I'm kind of cautious here on, as well as on a lot of things. But I would use this bottom of value area, which is about 88.20, which also coincides, which I like a lot of times, these value areas coincide with the moving averages. So you got the 100-day moving average right there and the bottom of value. So I would really be cautious if we get below 88. But for now, the trend, as crazy it looks, the last couple of days is still up for Microsoft. So I still like it as a long. I have no position right now, but that support is $88.
All right, overall long Microsoft for Christian. Mike, what do you got on it?
So yesterday we everybody can see my screen. Just want to make sure here that I'm sharing.
Yeah, it looks good.
Okay, so yesterday we had that big gap up on the Morgan Stanley upgrade, right? And it just took off all day long, and momentum sweepers left, right, and center on this thing. And then somebody close to the end of the day bought the September hundreds and the October hundreds. But overall, my feeling was here that this market was going to come back in. I thought yesterday was a fake day, and so I didn't take it. And honestly, I think they're rotating out of beta and technology here a little bit. This is one of the anointed stocks, right? If you go through the last couple months, this is one of the strong ones. Like Christian, I like the moving averages. I also have a trend line that comes in down here. Christian is not far off your 88.20 area, right, where the 100-day is, right? It's just a little bit below there as well. I would try to buy Microsoft off there if the market stabilized, but if not, I think this thing could pull big time if they start rotating out of tech. Banks have corrected, energy's corrected, biotech's corrected. Tech really hasn't corrected through this whole process. We may be just starting to see some of this here. So I'm waiting on Microsoft. I wouldn't buy it until the market stabilizes.
Okay, I think my analysis is closer to yours, Mike. We've looked at this several times in the 28 weeks that we've been doing Analyze Your Trade. And, I'm a swing trader. I look for the next big impulsive move, either up or down. And over the last couple of months, people would ask about Microsoft, and I go, hey, it's just too mature a trend for me. Could keep going up, but who knows how far. And something unique. So I use a combination of Ichimoku Cloud. You can see the shaded area here, and I use a very simple approach to Elliott Wave. And so, this has been a big wave 3. No big secret there. You don't need a degree in Elliosity to see that, right? Big, huge monster trend. But something new has happened in the last couple of days. It broke through the Ichimoku Cloud. It hasn't broken through the Ichimoku Cloud since this trend got started a couple of years ago. And so it broke key support levels. And if it were to take out that level, and I agree with both of you, this is prior low is basically what it is. It sounds like that lines up with your trend line, lines up with the 100-day moving average. If we break this low, we're probably going to correct into this Fibonacci retracement zone, these two blue lines, if you can see them, and it's about between, call it 78 and 66.50. You got the 200 moving average in the way that might provide some support, but even if it stalled and found support at the 200, there'd still be a pretty nice trade, you know, from 88 down to 81. That's about a 10% down move. So that would be, if we break that support level, that prior low, I'd be looking for a short on Microsoft. And because I see it breaking down, it is technically in an uptrend. If you use down theory, right? Higher highs, higher lows, higher highs, higher lows still. But if we break that last layer higher low, then that definition of an uptrend is no longer met, and we could be heading down. So I got to watch on Microsoft for a potential short. That's my outlook on it. All right, the next one up was a symbol we were talking about before we went live on the air. This is one I'd never heard of. I think Christian's been following it, but it's interesting. It is BOTZ bots, and it's a robotics AI ETF. So maybe lead us off there, Christian, with your thoughts on bots.
All right. Yeah. And we were talking, you know, it's a ETF that I've been very familiar with, and this theme has been one of the biggest growth areas of 2017. And there's two ETFs that are out there. There's the Robo ETF and the Bots ETF. The Bots is a little bit, has a little bit different structure in terms of the names that it's following. It's following a lot of Japanese names. I think NVIDIA is actually the #1 holding of it. But what you could see on Bloomberg, which it's nice because Bloomberg allows you to do this for ETFs. But you know, if you go back 5 years, this is a fairly recent ETF. But you could, if you see all these fund flows, so these are all inflows. So you can see for the last year, it's been a very popular trade, very popular trend. However, you know, we could see that the fund flows have really started to slow down, especially in January. It looks like there was just a huge amount of money that went into this ETF, and then some money, a little bit of money came out. But the technicals, all that is kind of neither here nor there. Really, from the technicals, it does look like it's, you know, it tried to fight back a little bit today, which I think we're going to see that in a lot of stocks, and really got beaten back down. So, you know, again, I use the value areas. We're now sitting below the 50 and the 100-day moving average. So technically, we're still in an uptrend. But I would think that there might be some more short-term weakness in this while we're back below the value area, slipping back below it today. So I think for the short term, I would be neutral to kind of, I think this could have some more pain to go through today. This was actually one of the best performing groups today because Japan was up, but you could see ended down 1.5%. So we've got to reclaim some territory here first with the March value area, then the 100-day moving average. Until that happens, there could be some more short-term weakness and support down here at the 200-day moving average as well as 23.
Okay, so neutral, maybe short-term bearish is what I hear you saying.
Yeah, it looks that way.
Yeah. All right. So I couldn't wait to say this. So Mike, what you got on bots?
I see a possible head and shoulder stop on this thing. I see, you know, you got your left shoulder clearly defined, your head and your right shoulder here, and your neckline is right around that 23 area. And if it gets through that, the implied move would be, you're looking like a $4 move. So you put you down towards that 19 area, which would bring us all the way down to this area here, maybe get caught up in this support level down here around 20. The other thing to watch is you have an open gap up here above this area. So if it gets strong, like Christian said, if it can hold in, you have a nice little gap to fill up here with a big void in it. To me, this is a tough name because it's a very gappy stock. It's, you know, Christian did his research. They were telling me about it, you know, a lot of Japanese name. This is not something I would typically play unless I was a long-term investor. And I don't know. I look at this chart and I say, there's no edge either way. I would try to short it if it got below 23. And if it held there, I'd try to go long to see if it can break above the 20, let's call it this 25 area for a fill. And that's how I'd play that.
All right. Doesn't sound like anybody's on fire to trade this thing right now. And I'm not either. You know, using my analysis, you know, had a big impressive run up like has been noted, and it broke down. It is in the short term putting in a lower high new low. It's under the Ichimoku cloud. So it looks like we're in a short-term corrective move. But the target on this, I always conservatively place my target at the top of the Fibonacci retracement zone for, profit potential measurement. And we're not very far away from it. It's about 2250 is where I would project it would go down to, and it would probably find some support at that 200. And given the price structure here, my stop would be up above here, right? So it's got a bigger potential loss than it does reward. So the reward to risk ratio on it is less than 1, and that doesn't fit my trading plan. I want my winners to be bigger than my losers, not the other way around. So it's a no-go, even though I think it probably will work its way down at least to that 200 before potentially resuming the next up move. So that's that. All right, next up is CAR. I'm not sure I know what that is. Probably looked at it before. Oh, Avis.
It's Avis. It's rental cars.
Yeah, Avis. Okay. Okay, well, I have comments on this. It took me about half a second, but I'll wait my turn. So, Christian, what do you think about Avis?
Yes, sir. And I can't believe I'm going to actually say this, but this chart doesn't look that bad. If we kind of zoom out here a little bit, we've got a double bottom in here, and since it made that double bottom, it's been grinding higher here. It's on a little bit of a dip. I'm going to zoom in just for a second, and then I'll zoom back out. But you've got kind of a rolling 50-day moving average. It is sitting on the top of value. I would, if you're long this name, I would guess stay long this name until we really start to push into the value area for now. You do have a bearish MACD, but then just taking a step back, if we can hold in here and hold into this little bit of a move down, you could see that purple line that I've got drawn up there. If we can manage to get just a little bit further higher, I would say if you're long, shoot for that 54 handle. So I would say it looks constructive if it can hold. If you can manage to hold right in here, I think shoot for that 54 target.
Okay. And Mike, Avis.
You know what I find interesting about this chart is when we had the sell-off back here in February, this thing came in hard, right? It just put a new high in, big pull, and then you can see in February it really came in hard with the markets and then had a big bounce back to a new all-time high with it. It's hanging in well. I can't disagree with Christian. It's holding the breakout, and the breakout for me was this, this 46.60 area where it's been holding it, and it keeps trying to go below and taking it back. For me, the 8 to 21 days are the fast-moving averages. Those are the ones I like to stay in with the names above them, right? And it's tight. That said, I'm not sure the catalyst here until earnings at this point for it. I'm not sure what's going on. Also, I wanted to make aware of this. I'm not sure what their buyback is, but most companies' buyback programs are turned off now, right? As we come into earnings, they have to, by law, turn them off the 5 weeks coming into earnings. And I don't know if it has as much of a floor under it as it had as it went forward. Like, names like Apple, they're off at this point. The banks, they're off. You can see there's no floor on them. I just don't have a lot of – the chart looks good. I just don't have a lot of conviction in this name right now. I guess for whatever reason, I'd probably hold off here.
All right. And I would hold off too. I don't like it. I don't like the chart. It doesn't meet my criteria. It's, a swing trader, but this one, I like orderly swings, and this one's a little disorderly. It breaks support, breaks resistance on a regular basis, and for that reason, it becomes a little bit unpredictable for me. It did find some support at the 200, but it keeps breaking through the Ichimoku cloud. When I see that, when it looks, using my trading method, my approach, my rules, it just tells me it's an opportunity to get stopped out either direction for a loss. Even if you're right about the big trend, right? I use, higher high, higher low support levels for my stops, and this thing just regularly blows through those. So I wouldn't be happy trying to trade something like that. So I would take a definite pass on it. Pretty interesting. I just saw a news item come across that it's not on the list, but I thought people probably want to know, right? Tesla just got downgraded by Moody's. Their debt.
Yeah, that came out about a half hour ago.
That's not good news. They got a lot of debt.
Yep. And they have SpaceX yet to account for.
Yeah, and the chart on Tesla, I'll pull it up. you guys can comment on it. I'm sure people would appreciate hearing about Tesla, right? Of course, they got brutalized today, down 8.61%. The problem is it's already in the correction zone, or I was tempted to just try and catch the momentum and go with it. It might go lower, but it's I got trading rules. I got to follow them, and it's kind of right in the middle of the anticipated correction zone already. So I'm not going to short it, but I am sorely tempted to. It's funny, I subscribe to some symbols on Seeking Alpha just to hear the articles that are being written about them, and a lot of ink is spilled about Tesla, and mostly the bulls write about the bears and the bears write about the bulls. They write more about each other than they do the company, which is fun to listen to, that dialogue. But boy, they got a lot of headwind. I would not be long Tesla at this point myself. I don't know if you guys have thoughts on it while we're here.
Yeah, I mean, I agree with the Seeking Alpha. I mean, I think it's one of the names that people are most passionate about, either on the long or the short, right? It's very odd to see people to be that pitted against each other in a name, but it seems like people are very passionate. You've got a very well-known CEO, and at the same point, so I think a lot of bulls are very into Elon Musk and what he creates. And then on the bearish side,
a cult following, almost,
yeah,
really,
absolutely a cult following. And then on the bear side, that they're stacking up. They've got a lot of chips against them. They've got a lot of production issues. And you've got just a huge amount of debt. And clearly you saw what happened today to it. So I think people were kind of on to the downgrade. Somebody always knows, right? I mean, the price action really was nasty throughout the session in Tesla. So kind of feels like somebody knew that downgrade was coming. But I mean, you've got a lot of reasons for people to be very bullish, and you've got a lot of reasons for people to be very bearish. So it's definitely a battleground stock. Have
And so you have any trades you see, or you kind of standing back on this one?
I want no exposure to Tesla because I really don't want to short Mr. Elon Musk. I don't like to short. I do have my own kind of personal feelings in stocks that or CEOs that I really like. I don't want to short, but that's the way I would go too. We talked about this in the trading room a couple days ago, and I said I think Tesla is a short here, and it's really broken. I don't have a position. I did not trade it. I would just rather just not participate. It's also, for me, and I don't know if you guys have experienced this too, it's a very tricky stock too. Now, it does look like it's definitely breaking down here, but there's been a couple times over the last year where it looks like it's going to break one way and then just does a complete about face and turns the other way. So I just stay out of Tesla.
All the Kool-Aid drinkers come to the rescue.
Right.
I don't know. What do you think, Mike?
I have a different view. So I think I'll have fun with this. So it broke that uptrend that it's been tracking for a long time last week, and it wasn't able to retake it right away, which usually it did when it broke it. So it was definitely in a weak phase. I do think you're right. I think that news is built in because I'm looking at a pre-market, post-market, it's not moving. If that downgrade came out right after the close, and it really hasn't moved off of it on the Moody's debt, it was built in. Look this here, it filled this gap right to it, right? Went right down, filled this gap. It's got support in this area. And for me, most importantly, I opened this up to a longer chart, right? Maybe another gap down here at 269 if it wants it, right? That would be my next spot. But most importantly, what I want to say here is this thing is really, really extended to the downside now. And what I mean by that is the 8-day moving average is all the way up at 305, is at 279, right? Down in this area. We're oversold on RSI. We're out of the Bollinger Bands. I'm looking to take this on any market strength tomorrow and take this for a long scalp. Maybe nothing more than an hour, maybe not even, maybe a full day, depending what the action looks like, but some type of reversion back to the means before it plunges again. So the action will have to be there for me to get into it. The other thing I know about this name is I remember reading that Elon Musk and people loyal to him own 62% of this stock. There's just not a big float out there for it for shorts. And so when they get short like they are here, they get squeezed real easy. So we'll see.
Yeah, we'll definitely see. And I'm with Christian. I'm not. I think we all said it's a tough one to trade. And sounds like, Mike, you're on a shorter time frame. I don't day trade. I'm in 4 to 6 weeks, and so a position trade on this, that long is tough. That's tough.
Yeah, absolutely. And there has been some big buying in gold. If we go to the go back to Bloomberg, because it is an ETF, so you could actually see there's been some accumulation. Not huge. This is a 5-year chart. If I go into the 1 year,
we don't have your chart. Got you or yeah.
What's that? Oh,
we
let me see. Yeah, let me go back. See why that happened. Screen share.
All of them. David, did you push a button?
No, I didn't change anything.
How's that? Nope. Is that working? No.
Yeah, the sharing quit working here.
Let's try one more time.
It's not letting me share now.
Mine's not sharing either anymore.
Trying.
All right, time to short Google. They got technology problems here.
They have other bigger problems.
Yeah, that's weird. I just tried to reshare the list, and the icon.
Well, we're gonna have to verbalize it. Right?
Okay, that's fun. So gold has seen a little bit of accumulation in the last couple of weeks through ETF fund flows. I also look at not only GLD but IAU. That's another long only ETF. But it does look like there's been like I said, there's been some money that's been going into gold the last 2 weeks. It does need to continue to kind of break higher here. The last. Just in the short term, it's been running into some difficulty around this 128, 129 level. That's been going back for the last couple months. Previous to that, it had a little bit of resistance back on September of last year, right around that 128 and maybe 128.35 level. So it does need to continue to punch higher here. If it can maintain that, which it is showing a couple bullish characteristics, I just would rather have gold kind of prove it to me first that it is actually moving outside of the range. If it does, I'd rather play. I'm going to just veer off here for a second. I would rather play gold via the miners. We saw a hell of a lot of activity yesterday in Newmont Mining yesterday. But I think gold looks constructive here. It just has to move up a little bit further. So I'm starting to get a little bit bullish gold here.
A little bit bullish on gold. Okay, I'll hold my comments. Mike, gold.
So gold hedge against inflation. Inflation, which looked like it was about to run rampant, came crashing back in this last month. We'll see what it does next month. Right where it closed at today is really kind of the area it has to get through and hold. It's broken through it a couple times, but always crashes right back down into it. If it's going to have any kind of upside momentum, it's got to get above this 120, this 128 area, 128.40 area, somewhere in that range. There's been a little flow into gold, but really, I think Christian brought it up. There's been a lot of flow into the miners, big time flow into the miners, and big flow into silver. So I think I'd actually agree with them. I'd rather play the miners at this point. They seem to be more interested in those than they are in the metal themselves. And, today, big gap down, reverse back up. I don't know. I used to play gold all the time. I haven't touched it since the election. That was the last time I traded gold at this point. Maybe I should start looking at it again here, but it just seems like it really can't get going. And every time it gets extended off the 8-day, it pulls back in. I'd wait till I saw real option flow around it. I think they're just moving into it for protection with this market. If this market turns and starts ripping back up, gold will come back down.
Yeah, gold is tough. Gold is really tough. When I analyze it, I like to look at the futures chart. I'm looking right now at the gold futures daily continuous chart. Because GLD, the ETF, is just going to trail gold. It's just going to move, do whatever gold does. That's how it's designed. And it is tough. Big move up, pulled back, like you said today, a little bit of a reversal. Yeah, if the indexes keep coming down and we continue to see, some building strength in gold, then I'm going to like it and go long big time. But it's just having a tough time getting any kind of momentum going. And for the gold miners, it's interesting. Some of the individual names are nice. The the ETF, the GDX, is not. It hasn't followed the moves up. So not all the miners are doing well. So probably individual plays are better than trying to do the miner ETF on gold. But yeah, I'm just looking for it to get some follow through and some strength, and it could then be big, but not yet. Not yet for me. Next up, Intel, INTC. I worked for Intel for about 14 years, and their employee stock options and stock purchase program got me interested in trading because I joined in '93, and it split and doubled about 4 times before the dot-com crash, and it made me think I was a really good trader back then. And then I had to go learn how to really do it. But Intel's an interesting company, interesting stock. And what do you think of it, Christian?
Yeah, I think the last time that I was on, I was bullish Intel. You know, just like a lot of symbols, I think for today, right now, and in this market environment, I'm neutral. We hit a target that is on my charts, which you can't see right now, but right around 53.5. That hit a previous level of that's a high volume area. It's what I call a VPOC, a virgin point of control. Since we hit that, just a hair under 54, we've kind of reverted back down, and we've been kind of stuck in a little bit of in chop. I think it has to get back to that level to play a breakout. So right now I'm neutral Intel, and I think it's got to get back to 54, at least back above 53, and then I would consider that for a long swing.
All right, so neutral for now. Mike, what do you got on Intel?
It held the 8-day moving average today, guys. How bearish can you get on a stock that in a market sell-off, it's still above the 8-day moving average and close to a 52-week high? You know, it was just a stone throws away from it today when it came in with the market. I think this is a go-to name until this market gives me a reason not to. Intel is on my list of names I'm going to go to first and foremost. It's one of those couple names right now that they want to own and they keep coming back for it. It's been, for how many years now has it been in this, stuck down here? I mean, it's just starting to climb back out of this big, huge hole. For me, Intel is probably under-owned, and they keep coming after it. The news from China yesterday that they were going to consider buying more American semis instead to help close the trade gap was a good thing for Intel, especially. I like Intel here. Any dips you get, I'd be one of the first names I go buying to it, and the call buying has been backing it up. Every dip they come in, they buy it.
All right, overall bullish on Intel. My take on it, we did a strangle play back at earnings and caught that huge gap up, about a 10% gap up on earnings, and since then it's become a little disorderly, so it doesn't meet my criteria for trading. It's a wonderful company, but it's pushing. It's trying to get up to 60. Last time it was at 60 was September of 2000. I remember it well, and it hasn't seen it since. It went down to 14, and that hurt. But again, it doesn't meet my trading criteria right now. It's become a little disorderly. It still isn't an uptrend, but moving a little bit unpredictably. So I'm looking for a little more orderly markets that I can profit from currently. Next, the Russell ETF, IWM. We'll just go back around, Christian.
Yeah, so the IWM, I use IWM for a good gauge of riskiness in this market. It usually will tend to kind of, I notice that it tends to lead the next market move. So I use it as a leading indicator rather than trading it that much. Right now, to me, it's another neutral. It's sitting right between the 100 and the 200-day moving average. It's sitting smack in the middle of the value area. I would let this ETF, let the small caps pick a direction, as I think they're just, again, right in the middle of a zone. I would want to see either a move above 154.5. And that will get you back above the 50-day moving average as well as the short-term moving averages, Or you've got very close to the 200-day moving average. You've got the bottom of value, which is right around 147.5. If it breaks there, I would be bearish the overall market. And again, just to reiterate what I said, if it gets back above 154.5, I would be bullish the market. Until now, neutral.
Neutral on Russell. And interesting, your comment on it leading the other indexes quite often. I think a lot of us have observed that. Mike, where are you at on Russell?
You know, what's interesting is yesterday when the squeeze took place, they swept the living hell out of the SPY yesterday's expiration calls to keep the squeeze going. Today on the way down, they're sweeping tomorrow's and Thursday's expiration of the SPYs and almost no action on the Russell. And that doesn't mean there wasn't puts and stuff being bought. There just wasn't, you know, institutional flow, the stuff we like to track. It came down today right to my trend line of support at that 159, a little bit over 158. What is it? 140? I'm sorry, 149.80ish, and bounced right off of there. It has been leading. And the one thing I'll say about this is to keep an eye on crude. Now, crude I think is getting smacked here as the API numbers came in a little not really good today, a little while ago. So is crude down? Double check on that. Yeah, crude is down again under 65, getting smacked. But if energy goes, it'll lift this up. And energy is one of those places that's been down for a long time, and sentiment's really bad there in the energy names themselves. And there's such a huge component of the Russell that if they go, the Russell's going to lead us out of this, and you could see that start the next move. So I wouldn't jump the gun here, but I do agree, watch the Russell here. For me, I'm watching the SPY. Honestly, I'm watching for that reversal candle that we got back in February. Do they come down here, put a nice big reversal candle in that we can take some long swings against on the SPY? I'm looking for a place where they want to buy this market, because I got to tell you, the last 2 weeks, they have not wanted to buy this market. For 2 weeks now, the option flow has been horrible. And yesterday, during this move we had up, there was no good option buying. It was all cheap, small stuff into just cheap stuff, nothing big. So yeah, the Russell, to me, all the indexes here are watching for a reversal, and then I would go long.
Okay, interesting that the Russell is sitting. You know, the 200 is at 147.79. Today's close was above that a couple points, 150.36. The Dow and the S&P are sitting right on their 200, and so if we do go down, they would have led the Russell down. So this is going to teach us something, but I'm not sure what. It'll be an interesting case study afterwards, right? So we'll watch. I'm neutral on the Russell. I wouldn't go long right now, and I wouldn't take a short until we broke that 200 at about 147.79. If we break that, look out, man. There's some monster shorts coming on it. Well, let's break off the list for a minute and go around and share what your favorite trade is that may not be on this list. You know, what do you currently like that maybe has a good entry right now? So, Christian, what's got your pulse rate up?
Yeah, sure. And just one other note about the Russell, the IWM. There's actually virtually no energy exposure in that. It used to be different. It used to be different years ago, but there's less than 2% energy exposure in the Russell. It's mainly banks and financial companies. So. Favorite trade, I would say, you know, and again, this going into today, I would say I've been very bullish the enterprise and application software names. Clearly, those names, I think Salesforce just got absolutely beaten up at the end of the day. I do still like this group a lot. I actually have an index out there that tracks this overall group, and you know, so I think you just kind of have to wait and see a couple of days for the volatility to come in a little bit. But that's where there's been the strength in the market, regardless over the last couple of hours of the day. So, you know, names like Adobe, names like NTNX have been very strong, but I think they just need a little bit of time to breathe a little bit. Business sentiment continues to be, that just came out, 2 weeks ago. Business sentiment right now, small business sentiment is at an all-time high, or it's been running very hot. So I still like names like that. I like names like GoDaddy. anything that has to do with businesses right now, even though you got a big old bearish engulfing bar on that. But once the dust settles, maybe give it a couple days to a week. I think this will be a great group to get back involved in once the volatility subsides.
All right, enterprise software, probably Oracle's in your bucket there as well.
Yeah, a little bit of that one. That one I don't love, but just some of the other names in the group.
All right. All right. What does Mike like?
I'm going to be big on the Jack Dorsey bandwagon here. Square is a name I absolutely love. I've traded a bunch this year, had a lot of success with it. And this pullback here, these last couple of days, is giving a nice entrance here to get back long it. It has a lot of catalysts moving forward. It's getting big into the payer space. It's getting also into the the Bitcoin type space of being able to do those electronic transactions, which makes them point blank a buyout candidate, because if you're one of those bigger companies that wants to get involved in that, they're going to have that technology ahead of you. They make a nice buyout candidate. So I like that. I like what they've been doing, and I love the constant bullish flow that's been coming into that. Yesterday, somebody came out, bought 33,000, sold to open 33,000 April 45 puts, telling us that this stock is not going to go below 45 by April expiration. So I'd be looking to buy this on any weakness. And just one comment I want to make is Twitter today, Citron came out short. It's one of my favorite names. And he was bashing them all over the place. And we know how he works. He gets short, then he goes out and gets everybody to follow through. What I love today is Twitter came out and immediately defended themselves and said, we have not sold any data to anybody, was emphatic about it. And what a difference between Jack Dorsey on Twitter and Zuckerberg on Facebook, who's been hiding this whole time. This is what you're supposed to do when you're CEO. You come out and you defend your company and you stand up and you say, this is going to be proved wrong. We're going to be okay. So, for my thoughts, I like what they're doing there. Any weakness on Twitter, I think, is a buying opportunity here as well.
All right. Square and Twitter. You can't go to a small business, a hamburger stand, for crying out loud, who doesn't have a Square device on an iPad now. They have rapidly penetrated the market, man.
Yep.
With an overwhelmingly dominant product. It's pretty cool to see. And then they get the services on top of the hardware. So good business model and very successful. My trade right now I'm looking at, I was scanning the Dow right before we logged in here.
Dean, you there?
Hey, Dean, you there? Okay, I guess he got cut off. So, you guys want to go back to the list?
Yeah,
Yep.
so we can do that. And that's disappointing because it sounded like he had a really good name that he was going to come out with out of the Dow.
Yeah.
He's like, this is the best stock, and it's
GE.
It's blank.
It's GE.
Hey, Dean, are you back?
No, he's gone. He just dropped off.
Okay, I thought he was back for a second.
We'll give him a chance to log back in.
Here he comes.
Okay, I think he's... Hey,
Am I
Dean?
back?
Yeah.
Oh, that was weird. I was talking away, and all of a sudden I heard you say, I can't hear you. All right. Can you see my screen now?
Yeah, actually, I can.
Oh.
Okay. So I like American Express short. It just broke the 200 moving average after a big, long bullish run. Started to put in lower lows, lower highs, breaking the 200. We got a nice price target down 85, call it, to 74.5. So I'll probably be putting that trade on tomorrow. We'll see how things play out. But I like the pattern I'm seeing to go short American Express. That's my current favorite new kind of entry trade. All right. And that takes us to the next symbol on the list, which is Boeing. All right. And we'll just keep going here. Christian?
Yeah. So Boeing Boeing I have as a neutral right now. I think it's in one of those places that it will either show itself to be a long or a short, but you could even say right now it's possibly forming a head and shoulders pattern. It's got that right shoulder look to it. It's got support of the 100-day moving average, so I would not necessarily take a short position yet. But I would wait until that right shoulder does form. But it is sitting below value, which I would err on the short side. If it happens to get back inside value and prove that it's not a right shoulder, it might set up to continuation to the uptrend to the upside. And I would look at that level right around the 340 level for a possible continuation of trend. But right now it's kind of smack in the middle there, and the pattern has to reveal itself. So I'm neutral.
All right, neutral for Christian. Mike, what do you think about the Boeing?
Since we put that high in of 370, it's been putting in a series of lower highs in. It's got support here at 319. It's banged against this area now about 5 or 6 times and held it. But to me, if it breaks that, it's got nothing until right around 300. I don't know that the 100-day is going to be support here. I usually like to look at buys on the 100-day, but it's been so long since this thing's seen the 100-day, I couldn't tell you if it's going to hold or not at this point. And it's run so much at this point, I think there's just a big void. There's not a lot of support. When you look at down until you get down to 300 in that area, that 300 through 290 area, you have a tight cluster of candles where it based for a while. There's just no support until you get there. So we lose this area here. I'm looking for a possible short down towards 300.
I'm with you. I'm watching that exact same level. It's a prior low from earlier this year. It is putting in lower lows, lower highs. If we break that level, which we're pretty close to, I'm short too, and I show a correction, a Fibonacci retracement zone, 376 down to 220, and the 200 will be hitting the top edge of that. So that's probably about where we find support. And I'm with you, man. I think if it breaks this prior support, nothing but air for quite a while.
And it's tagged it a bunch of times, even today. Tagged it and just barely held it.
And so I would not take the short until it breaks that. That's for sure, right? I would definitely wait for it to break that prior support, because it may sit there for a long time, or might reverse off it up. So,
or what I would do is if the market bounces somewhat tomorrow and then it looks like it's going to roll over again, I would take it there or take it into a bounce so you have a little bit of room to that line.
All right, so Boeing potentially short and Christian was neutral. T. AT&T. You. That's a.
I think that might be my. Can I use that as my rating?
Yes.
Yeah, it's stuck below. For me, it's stuck below the 200-day moving average. It looks horrible. Do I want to short it here? I'm definitely not bullish this name. I'm not sure if I want to short it here. I think whenever it kind of rallies up to the 200-day moving average, have a ball. That's your best place to short it. But here it looks a tiny bit oversold. I would wait. Maybe some defensive money flows into AT&T, which will set up for another short opportunity. But I see a lot of ugliness in this chart. I don't see a lot of opportunities on either side unless it makes a move trying to retest that 200-day moving average. At that point, I would short it.
All right. And Mike, do you have your own guttural sound for this chart, or what do you think?
It has support here, right around where it held these last couple of days. You go back, and we hit this area in September and held it. We hit it back in July and held it. That said, to me, this thing has been sideways, range bound, not looking pretty. I just think there's better names to play out there, better names to go along with. It just doesn't grab my attention. I just, that market, that whole cell phone market at this point is just, they're all just beating on each other, trying to buy to get more spectrum. So I just don't like the space. I'm just avoiding the space completely at this point.
Yeah, and I'm with you. I said, when I pulled the chart up. When I'm teaching my trading method and the patterns I'm looking for, I like bringing one like this up as an example of a chart you should be able to reject in a fraction of a second, and just look at it and go, no thanks. Let's go find something that's tradable. And yeah, this one, I wouldn't touch it. All right, and it took me about that long to figure that out, because you know, we all have our trading patterns and setup we're looking for, and you know, it's either there or it's not. And for this one, it is not there. Of course, we got to look at Apple. We couldn't do a show without looking at Apple. And I won't make any noise about this one. So Christian.
Nice. Okay, so Apple saw a little bit of call buying this morning, and then we saw some puts go up in Apple today, and you know, really a nasty day for Apple. Was it down 2.6% today? However, it is not below the 200-day moving average. Again, I'm sorry to kind of give so many neutrals on here, but I think things are kind of, you know, either going to really overall start to break down seriously. You know, in this, you could, I think the 200-day moving average is a great indicator for this. And, you know, until that happens, I think we just kind of have to let it, you know, let it happen, wait and see. And if it breaks the 200-day moving average, you know, Apple's not one of those names that I really want to short, but it is what it is. You know, you could use your stop being the 200-day moving average. However, we're not there yet. We've got some big back and forth movement the last couple of days. I've said this on a couple other names, but I think this volatility just has to either subside for these names to kind of continue with the uptrend, or we've got something bigger going on and we're gonna really break down here. So Apple, a nasty day, started to go higher, ended up falling out of bed 2.5%. However, it didn't take out, was it Friday's low? So I would not short it right now. I would wait until it takes out that Friday's low, which is very close to the 200-day moving average. That's what I would look for a short. On the upside, you know, it's got to reclaim those short-term moving averages to kind of think about it in the context of a long. So right now, Apple's neutral for me until it makes that one of those moves.
Yeah, I don't think we have to apologize for being neutral so many stocks, right? And I've talked about this in my trading room. You know, sometimes the best trade is no trade, right? We don't have to force it. We don't have to take lame setups, right? We wait for the good ones. And you know, the good news is when it breaks, when the overall market breaks out of the current, you know, volatility and picks a direction, then the problem's going to be there's so many trades I'm having trouble picking one, right? Versus I'm neutral on everything. And you know, as we were talking about Apple, it occurred to me it's kind of like Tesla, right? In terms of a cult following, the only difference is Apple actually has earnings, right? They make money, but there is a bit of a, you know, a cult following to Apple, you know, perma bulls for Apple. But what do you think about the chart there, Mike?
To me, Apple here is going to go where the market goes. The thing to remember here is the market sells off. Apple doesn't have that big buyback program running right now, which has been huge support for it. When we sold off in February, that buyback program was off. Look at the size of the move down. It's off again here. So if the market's weak, this is going to be one of my go-to shorts for intraday trades. If the market's strong, it's probably going to be a decent name to go long down here, this far down off of the 8-day moving average at this point, at the bottom of the Bollinger Band. It has a little bit of support around 163 if it wants to go. And you know, the 200 days at what, 162.30ish at this point. So it wouldn't be much to get down there at this point. I mean, it could hit that in a day or so, given to the size of today's move. So we can do that one day tomorrow. So Apple's a name I would look for trades both ways. The one thing to remember, it has earnings coming up soon. So, you know, chances are they try to buy this back ahead of earnings if the market is strong. This is really just a no trade unless I'm trading it with the trending of the market here. It's not trending on its own.
Yeah, I like your analysis, Mike. And if I were to take any trade, it would be short, but not until we get below the 200. It's tested that. It's found pretty solid support there. And I wouldn't trade it, you know, a few days into earnings. So I'd sit that out too. So there's probably nothing here for me. I'll bet, David, that a lot of people asked about Facebook. They've been in the news so much, it probably just didn't make the list because, you know, we keep we try not to do repeats, but there's so much going on. Maybe it'd be fun to look at the chart for Facebook.
Yeah, there was several requests for Facebook, but yeah, because of we talked about it either on the last episode or the one before, so that was the limit. Yeah,
so much.
That'd be a good one.
So much has happened. Let's go ahead and do a quick round on Facebook. I'll lead off. I got my chart up here and give you guys a chance to take a look at it. Wow. Wow again. And I think it was Mike made the comment that Zuckerberg really hasn't covered himself in glory here and how he's handling the current crisis. It's already at the Fibonacci retracement zone. So for me, it may be a little late to try and go short on this thing. Probably got some room to go, but it starts to get a little hard to predict how much farther. But it's solidly below the 200, clearly bearish. And it may get a bounce soon. I wish I had taken it when the sign was there. I didn't, and I'm regretting that because it was a pretty clear short setup. But Christian, what do you think about Facebook?
Facebook saturation. I think that was nice. Leaving it. We've heard so much about Facebook, right, the last couple of days, and certainly it's been a big mover. And I do like what Mike had to say about the comments about the CEO. Just really not the right way to handle the situation at all. So I totally agree that was a great comment about the Zuck. Yeah, I mean, there's been a lot of option flow in Facebook two-way. I had somebody ask me about it yesterday. They said, what did you think of the calls that went up? And I said, well, there was a lot of puts that went up too. So there's just a ton of option activity right now expressing two sides. There was a big call order in this one, very small amount of contracts today, but went out a couple months. But, really the technicals, I think, are, to me, look like they're breaking down, or they have broken down. And I'm with you, Dean, on this one. This one looked like an awesome short. I did not short it, this name, but at this point it's getting oversold. As you said, I'm not sure how much more downside it has to go. I would actually target. I've got some good levels for you in Facebook, which yeah, you still can't see my screen, but
I think the sharing's working now.
Oh, is it? Let me see.
Working for me.
No, it's just working for you because you came back in. We'd have to go out.
Okay.
All right. Well, if you go to the weekly chart, on the weekly chart, you have a whole year of the value area. 147.28, you do have some support there. We actually had talked about this in the trading room. There's what's called an 80% rule when you're using a value area. Once you get into the value area, there's firmly in the value area, there's an 80% chance that you go from one side to the other. We're very close to it. I didn't see what the low is of the day, but you got support at 147.28. So that may be a level that some bulls kind of come into play in that name. And so yeah, just clearly there was a nice call order around midday today. Clearly it had moved a little bit more to the downside, but you do have a nice level of support. So I would not short it here either.
All right. Very good. And it's funny, on the weekly chart, that level you called out, that 147-ish level, is actually the bottom edge of the Ichimoku cloud. So I'm projecting support there as well. All right. Mike, Facebook.
So I'm going to tell you guys to throw your charts out on this name right now. And the reason I'm going to say that to you is it's not that I don't look at it. And I did say, it could find support around this 150 area. I said that on Sunday. But you have an event taking place and news and everything going on. And he's going to be up on the Hill testifying to the Senate sometime shortly. And now it's coming out, that, if you start looking at it, they've had access to Android phone conversations and text messages. This could spell a very, very bad start of a run for Facebook. Earnings is going to be beyond interesting because you have to assume subscriber growth is going to be falling off, and they're going to have to bring in guidance down at this point. And if you look, Christian, your weekly chart, by the way, great look. I was looking there as well. I mean, you could come all the way down to one. For me, or at this point, you can come down to this 130 area. I mean, it's gone so much if you look at how far this chart's run. Tons of call buying, tremendous amounts of put buying all over the place. Funds are trying to defend it right now. And you have Zuckerberg selling stock left, right, and center. His other high-level executives have been selling stock as well coming into this. I don't like this. You're playing an event-driven name right now. Other than scalping it one way or the other, or trying to buy it for a short-term trade when it's overextended, I would leave it alone because you never know when news is going to come out and something else is going to break.
Yeah, I agree. I agree with your comments. I do stick with my technical analysis, but it is it could get. Oh, sorry, it could get a lot worse. It does have a lot more to retrace. Even in the current retracement on the daily and deeper on the weekly chart. And in the earnings call, if they show subscriber, if they're losing users, if they have a net loss, man, whoo, look out. And I know there's a lot of people becoming very unhappy with Facebook, just users just talking to people that they're just kind of done with it. So we'll see how that plays out. Pretty interesting. Wow, we're at the end. So we got through a good number of names. But let's go ahead and just do a final wrap. Any kind of final thoughts? If there's a link or a web page or something you guys would like to share, this would be a good time to do that. So wrap it up, Christian. Final thoughts from you.
Yeah, sure. Final thoughts, and the next one was Raytheon on the list. It's actually one of the names that I really like on the list. Trump talked about a lot about defense, the defense budget, and kind of ramping up spending. So I'll just kind of lead off with that last one. This is a name that I really like here. It did hold support. I think it's got some good support to trade against, which is 214. So this is a group that I do like. We were actually going over a couple of these names in the trading room today. The other one, NOC and LMT, I think are also pretty technically strong right now. And again, it's great to look at for some trades in different areas because I think the majority of what we've been seeing, the last couple months, there's been so much even dip buying in technology, and it's just been a little bit frustrating in this market to find a lot of trades that are outside of tech. So I welcome whenever another group is starting to show a little bit of momentum to it. So I do like these defense names, and Raytheon in particular. Overall, just final thoughts. Yeah, I mean, there's a lot of volatility that's present in the marketplace, and this is while it's, I think for beginner traders and traders who have not traded through volatility, I've had in my career a couple big bouts of volatility. I've traded through the tech bubble. I've traded through the financial crisis. I was making markets for your big institutions. So I remember that time very vividly. So this is something where, going back to last year where we had no volatility, this is really good for traders to learn. So you don't have to be in this market every day. If you're not comfortable with trading, with seeing these types of whipsaw moves, move to a little bit more cash and let it work its way out. I mean, I think that there's going to be some really good opportunities either on the short side if they start breaking the 200-day moving average. It's going to really set up for possibly some fast moves to the downside. If we end up holding and consolidating a little bit, so as you can tell, I'm not making any predictions, kind of just letting the price action determine what we're going to do. And if we kind of hold in here and the volatility starts to come in, maybe the VIX gets under a 20, I think there's going to be a lot of dip opportunities in a lot of different names. But for now, being on the sidelines isn't a bad place if you're not comfortable with trading the risk. But just ultimately, it's a great opportunity to learn and to kind of get out of that mode of what we were in last year, which just doesn't typically historically last that long. Environments where we have the VIX around 11 or 12. I think these are more realistic, maybe a little bit more than usual, but I think very good markets to learn from right now. Yeah, you can visit me at TribecaTradeGroup.com. We do offer a trial, and there's no obligation up front. So thanks again for having me. I appreciate being on, especially Dean, Mike, thank you. And David, thank you as well. Appreciate it.
Yeah, good to have you here, Christian. I enjoy hearing your perspective for sure. Just on your comment there, I was thinking, because I got asked by a couple of my customers as well, hey, have you ever traded through any market like this before? And I go, yeah, I have. And in fact, what's more unusual is the market we just came out of, that low volatility, linear move up for, a couple of years. That was unusual.
Sure. And I think a lot of traders lost their muscle memory, right? Of being able to scalp and being able to short and so forth. So, this is good. I think it really wakes people up and really shows the opportunities that, the scalping has been just, has been great. So it really gets people out of their comfort zone of just kind of doing the same thing and buying the dip all the time. So I think it actually is a pretty good experience.
Yeah, that's a good perspective. Mike, final thoughts from you.
Really enjoy being here, Dean. You do as well, Christian. Thanks for having me again. Great point Christian made. Cash is a position, guys. If you're not comfortable trading here, don't trade. For me, very simple. Throw last year and the last 16 months out, because we're in a new environment. The market's changed. You have to change with it. You have to watch. We're in a higher volatility environment right now. Those lows that we had last year, as Christian said, they're gone. That was not the norm. We have a new environment. The option flow for me has been very, very telling. For the last 2 weeks, there have been no buying. Basically, since we put that high in on the Fed day, on the what do you call day? Not Fed day.
FOMC announcement.
Yep, we have really been sitting here now, just waiting, and I haven't seen any kind of option flow to come in. Things I like here: GE. Keep an eye on GE going into tomorrow. There's a rumor of Berkshire taking a very large stake in it that may be coming in. It bounced today on it. Lots of option flow around it. The name has been beaten the hell out of. So if he comes in, this thing could see a massive short squeeze. So if you want looking for a long, that's a name I'd keep an eye on going into tomorrow. Other than that, play the flow, play the reversal candle. Wait for a reversal candle before you start to swing long in this market, because it generally will give you one. What I do, I have smartoptiontrading.com. You come in, you can follow me there. We do daily setup videos, nightly recap videos, all the option flow and trades and news throughout the day to keep you informed on what's going on, and teaching sessions we do once a week for a subscriber webinar. If you don't want to come on and try that, follow me at Options Mike on Twitter. I post a lot of stuff on there for free. You can get an idea of what I do, and I put a lot of stuff out there that I don't charge for, so you'll get some stuff like that. Thanks again for having me, and I'll catch you guys next time.
All right. Hey, great to have you here, Mike. I really appreciate it. And it's funny, you made a comment, I think, about the FOMC announcement. What's interesting in this market is planned news, the FOMC and planned economic reports and GDP, and, they seem to have very little effect. It's breaking news, and that's much harder to work with, right? Breaking news is what is driving things. And but it's definitely interesting, and I agree with Christian's comment too, that it's actually good training, right, and good scalping opportunities. You just got to have a plan and trade it and be ready. So again, I'm Dean Jenkins with Follow Me Trades. It's my website, followmetrades.com, and a great way. I got my running P&L year after year after year posted here on the website, and you can drill in these buttons here and show the trade details of every year. I believe in complete transparency. I'm also audited by a third-party CPA firm. That what I put up here, actually trading in my own account. And a great way to get to know me and find out what I'm doing is just sign up for my free newsletter, published weekly, where I analyze the overall market, key markets, the S&P, gold, oil, and some selected things beyond that once in a while. So free newsletter, come check it out. And of course, I run a stock advisory service, and all the trades I'm taking on my own account, I call out ahead of time, and subscribers can follow along. Well, hey, great being here with you guys. Christian and Mike and David, thanks for pulling it all together, and I'll go ahead and turn it over to you.
All right, thanks guys, great show. For everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also be sure to join us next week for both shows. Crowd Forecast News will be back on April 2nd. It's Monday, 1 p.m. Eastern Time. And the next episode of this show will be on Tuesday, April 3rd at again at this new time of 4:30 p.m. Eastern. And just want to thank my guests again for this week: Christian Fromhertz of TribecaTradeGroup.com, Mike Pisani of AlphaShark.com, and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.